So we might make a start. Welcome everybody to the session today. We will have, I'm sure, a few latecomers joining us over the next sort of 5-10 minutes or so. We are recording today's session as well for those that couldn't actually join us today, but just to let you know, this will be recorded. My name's Rita Yates. For those that don't know me, I am the CEO and co-founder of Insurtech Australia. Insurtech Australia is a not-for-profit industry body where we have had the mission since 2017 of building a world-leading insurtech ecosystem right here in Australia. We're delighted today to be running this session with our partner RAC, who is also our key partner in Western Australia and has been a partner of ours for a number of years now. And we really thank them for all their support through Brad Chalder and his team, and also the BetterLabs team as well. In terms of the agenda for today, we're going to hear from Derek Gerrard, who's an investor and entrepreneur, as well as James Edwards, who is the current CEO at BetterLabs Ventures. Following James and Derek's presentation, we're going to move directly into the Q&A section of this virtual event, and we will be finished by 1 o'clock today. So we do encourage you to put any questions into the Q&A, which is at the bottom of your panel on Zoom, as we go through the presentation. Towards the end, we will be getting to those questions. So just a quick update from Insurtech Australia, just over the next couple of minutes. Despite COVID-19, we've seen our community and our ecosystem continue to grow. This month, we welcome all of our new members and partners who you can see on our screen now, and really pleased to have them on board and look forward to hearing more news from both those Insurtech members as well as those new corporate partners over the next few months or so. We also have a number of upcoming events over the next 5 weeks, and they should be on your screen now as well. So on the 15th of July, which is later this week, we have an event for members only focused on PR. And then we have a couple of sessions over the next month together with EY, which is part of our series around best practice insurtech partnerships. So we have one on the 28th of July and then one on the 25th of August as well. And then we have a session with Oz Cyber on the 9th of August, which is targeted to our members as well. And then later on in August, we will be running an event in partnership with our new partner Salesforce around a huge amount of research that they have been doing around consumers in the insurance space. So I am going to now hand over to Derek Gerrard and James Edwards of BetterLabs Ventures. This is a follow-up today to our initial introduction to BetterLabs Ventures, which we had last year. As you may know, BetterLabs is a $23 million venture fund operating out of Perth, WA, and it's backed by Insurtech Australia's partner, RAC. To date, BetterLabs has made over 15 investments across Australia and overseas. So without any further ado, I'm going to hand over to James and Derek to start the presentation. Thank you.
Thank you, Rita. You stole all my thunder, but that's okay. Very happy to be here and presenting to the Insurtech a wider Australian team again, which is fantastic. And our session will run for about 45 minutes, as Rita said, and then will be plenty of time for Q&A. If you could just move to the next slide, Joe, that would be great. So just with respect to our team, for those of you I haven't met online, my name is James Edwards and I'm the CEO of BetterLabs. I've got around 15 years of experience in the innovation funding space with PricewaterhouseCoopers, KPMG, and now 3 years with RAC BetterLabs. And sitting next to me here is Derek, who will introduce himself a bit later on, but is our fund manager. And recently we were lucky enough to get Casey Holiday on board as our investment associate. Casey joins us from the US, where he started up a B2C startup in 2013 and exited that business in 2019 when they were doing about 30 million US revenue a year, and relocated back to Perth with his wife and family. So we're very lucky to have him on board. So we've got a fantastic team at the moment running the fund. If we could go to the next slide. Thanks, Joe. So just for our specific presentation, I'll briefly cover on how BetterLabs Ventures fits into the broader RACWA strategic innovation plan. And then I'll hand over to Derek for the meat of the presentation, and he's going to really run through what are we looking for as a venture fund and then more importantly, tips and tricks on how to put your best foot forward for the application all the way through, hopefully, execution of a deal, and plenty of time for Q&A after that. Next slide, thanks, Joe. So, as many of you know, RACWA is a member-owned organisation. We were founded in WA way back in 1905, so we've just cracked our 115th anniversary, which is fantastic. We're a mutual organisation, so we all are for-profit for our members. And we are very successful, which is fantastic news. We have a growing membership base, now reaching 1.1 million people and over 60% of WA households. Our balance sheet is creeping towards $1 billion. Our revenue is creeping towards $1 billion. And we're actually quite profitable with that increasing every year. And also we have a very well-recognised brand in WA, most probably the most well-recognised brand in WA. Which is all very well and good, but about 5 or 6 years ago, our ex-CEO and my predecessor recognised that while we are doing very well, disruption for RAC is coming. And what you see on your screen there is the autonomous vehicle. Most of our revenue is predicated on the vehicle. So whether it's through insurance of the motor vehicle or our roadside assist program. So you can imagine with electric vehicles coming, there's going to be less breakdowns as there are less moving parts. So our roadside patrol vehicles aren't going to be required as much. But more importantly, with respect to autonomous vehicles, we're likely going to see a lot less accidents, but also the insurance model is going to be disrupted. So instead of insuring the drivers, there won't be any drivers, and that insurance is likely to be embedded with the vehicle manufacturers or potentially the fleet managers. So this wave of disruption is coming for RAC. We're just not sure when and how big that's going to be. So our predecessors were very good with their foresight around what we need to do is make ourselves resilient to this disruption and look at ways to innovate our future success. So if you can go to the next slide, thanks, Joe. So what we did is, so we knew we had to innovate. So the next step for us was really around where do we innovate? So we did do a whole bunch of future scenario planning to try and understand what the future looks like for both Western Australia, Australia, and the globe in, say, 2030 and beyond. So we came up with I think 5 scenarios around that. And what we found is a bunch of common themes, which we call our emerging innovation domains, which spread across those future scenarios. So these are the domains where we focus our resources and our cash, basically, in terms of strategic innovation. They're clean tech, so we look at waste, water, and energy in that space. Life, work, and money. How are people going to live and work in the future? So think gig economy, no asset ownership. We're moving towards subscription models, digital currencies, etc. The member community. Again, we have 1.1 million members. How do we get them interacting with each other more effectively? The third age, which looks at the aging population, not only with respect to care opportunities, but that might be with respect to finance and property, etc. And then the last 2 are very closely aligned with our current model. So next gen insurance and moving from a motoring club to a mobility club of the future. So these really inform the broader RAC and where to invest our strategic innovation efforts. So we now know we need to innovate. We now know where we wanted to innovate. The next step was really, how do we innovate? So if you go to the next slide, thanks, Joe. Most of you might know or might not know that corporates in Australia aren't very good at innovating. So there's an Australian government report called the Australian Systems Innovation Survey, which looks at how innovative Australia is compared to our peers in the OECD. And what it finds usually year on year is that our corporates rank at the bottom of the pile with respect to new to market innovation, whereas our startups rank towards the top of the pile in terms of new to market innovation. And there's a whole bunch of reasons behind that. Corporates tend to be risk adverse, more complex, more governance heavy, different KPIs to startups, etc. So RAC did a whole bunch of research around what was the best structure for us to really look at new business opportunities to carry us through to 2030. And we came up with a separate entity called BetterLabs. And in that particular entity, we look at 2 things. We look at internal prototyping or venture studios, where we're trying to spin up our own new entities and businesses, which we own 100% of. And then secondly, to spread our risk, we look at a corporate venture portfolio approach where we can invest in external startups and really look at those new business models and technologies that are coming over the horizon that we might be interested in. BetterLabs is set up, as I said, 100% owned by RAC, but very much separate. So we have our own processes, our own governance structures, our own board and our own funding, so we can move fast and work towards a startup pace. So if you could go to the next slides, thanks, Joe. So we're very lucky to launch BetterLabs Ventures back in September 2018, initially as a $3 million seed fund, but that got expanded in January 2020 to a $23 million seed, Series A and Series B fund, which has been fantastic. And as you can see by the statistics on the slide there, we've had fantastic interest in the fund to date. So over actually 300 applications now to date, over 100 pitches, 45 initial DDs, and we've executed 16 deals, which is fantastic. Most of those are in WA, but we have actually invested in a number of companies on the East Coast, which is fantastic. And in fact, 2 companies overseas in the Insurtech and clean energy space. We also sponsor and participate in the +8 Accelerator program here in WA. And we've just committed for the 2nd year there. And that's really a program which looks at encouraging and accelerating WA-based startups to accelerate and scale through the program, which is fantastic. So really good to have everybody on board here. Hopefully that's given you a bit of an overview of how BetterLabs Ventures fits into the wider RAC innovation program. I'll now hand over to Derek, who will introduce himself and look at what we talk to what we're looking for with respect to applying to the fund. Thank you.
Awesome. Thanks, James. Thanks, Joe. And yeah, thanks, Rita, for having us today. It's great to see so many people online, actually. I think that's probably indicative of and exciting around the people thinking about founding or have founded companies and how you scale those. So that's, in terms of the industry and where we're going, that's exciting to see. Just briefly, my background, so I've been in tech for 25 years, started with PwC in the .com boom, then crash, and then in various other roles globally till I came back to Perth. Again, had different roles here, but ended up having my own tech startup company called GreenSense. And we went through a few rounds of our own funding, got accelerating commercialization grants, expanded the business nationally, and then that was acquired by a listed company called ERM Power about 5 or 6 years ago. That was then acquired by Shell at the back end of last year. And having had that journey as a founder and entrepreneur, I set up a private equity group called Go Capital to leverage some of that money to invest back into tech companies in Australia, and as well as sitting on a number of boards of those businesses that I'm involved in. I guess got on board with the RAC to help set up what's now become BetterLabs and get the fund rolling here. So my role is both as entrepreneur in residence for our venture studio area where we're building our own companies, and then the fund manager running the fund. Part of it, I suppose, explaining that is for those entrepreneurs on the line that are thinking about applying for funding from us or are trying to raise money at the moment or have, one of the things I always found frustrating as an entrepreneur is you never really knew when you're talking to an investor, maybe what their process was, or you go and pitch and then you wouldn't hear back and you get into this awkward situation of, do I follow up or should I be waiting for them, and how does that all work? And so as far as BetterLabs Ventures goes, we're trying to create what hopefully is a very founder-friendly approach and be really transparent about how we go about things. And part of these sessions are to do that, to let you know really clearly what we're looking for, and then how you can best prepare when you want to come and chat to us about funding. So this slide just runs through kind of 6 things that are really important to what we're looking for. So yeah, sorry for the blurring a little bit. I thought we'd jump on the same camera today. Maybe not the best way to do it, but James is way better looking anyway, so it's better that I'm blurred out. So let me just walk you through these things. If you're thinking of approaching us, then it's good to have answers to these kind of questions. And you'll see later on that we have an application form, and these are the kind of questions that we're asking anyway. So good to kind of get a feel for what we're looking at. So when we talk about problem solution fit, one of the things that's really important to us is that you can clearly identify that you've got a Rita, can I just check? I just noticed our screen bouncing around. Just want to make sure that you can still hear us okay. I'm going assume that's yes and keep going.
Yes.
Yes. Okay. Thank you. Sorry, our screen's just frozen a little bit, so I'll keep going. Yeah. So the idea of the problem solution fit is going. You've clearly identified that you're solving a problem for a customer, and that you've got access to that customer, and you've got evidence that that customer is prepared to pay you for your solution to solve their problem. Now that might sound kind of simple in some ways, but we come across a lot of times people have got a great idea and they've put a lot of money or time into that idea, and they haven't done that without demonstrating there is really a market and a business, and those things are pretty important. Obviously, one of the great ways to do that is to find that you've got a paying customer and that you've created something that they've paid you $1 for at least. That starts de-risking your own investment, and it de-risks the business model and demonstrates you're solving that problem. But there are, of course, other ways to do that. When you're thinking about that problem and solution, of course, for us, it needs to match to one of our investment themes, which James went through before in terms of those 6 emerging innovation domains. If you're not 100% sure on what they are on our website. But another way to think about it is we don't really invest in things that are around life sciences. We don't invest in mining technology or agriculture technology. But anything else we probably would have a look at. So if you're not sure, best to put in an application and then we can kind of let you know. Obviously, in terms of the audience today, Insurtech or next-gen insurance is a key investment theme for us. So I'm pretty sure everyone's probably a good fit for us to have a conversation with. Next thing is we talk about innovation. And again, that might sound obvious, but what we're looking for is a new way of doing things. And often people think innovation has to be a tech company. That's probably true, but we also think more broadly about innovation. So that could be that you've got an innovative business model, or an innovative way you deal with customers, or an innovative internal efficiency. So innovation can be more than just the technology itself, but we want to make sure we understand what that is. And we found that the companies we've invested in that have been most successful, and I suspect probably along the lines of many people on the line, is we're not investing in things that are so far away from the way we do life right now that we're backing a 20-year journey. So we're not backing, how do we get to Mars or how do we get to the moon again? We're thinking about things that are maybe 1 or 2 steps improved from the way that we do life and do business now. And that's where we're looking for the innovation to be applied. Of course, it's highly likely that your innovation also then links into what we would call your defensibility strategy, or the moat that you build around your business. And so we're looking for you to be able to articulate what you think that defensibility strategy is. In other words, how do you, as you gain market share, how do you either defend against the incumbents that are there or the new entrants to the market, making sure you've got something that is a story there. In terms of market size, we say global markets here, but really this is a point. We're quite happy actually investing in companies that are even just focused on the Australian market, as long as we can see that the growth trajectory gets us on a venture style growth opportunity. And that's entirely feasible in insurance in Australia alone. And so really it's going, where are the great local entrepreneurs, great local businesses that have a broader impact that we can back? And maybe one way to think about it is in terms of an early stage venture that we would invest in and the kind of returns we need to see. We need to be pretty sure that you can get the business to at least absolute minimum $10 million a year revenue. And for insurance companies that are linking that into your premium, we're really talking about 10 million in terms of the net revenue to the company, not the gross written premium if you're in that line. So if it's a small business, 1, 2, 3 million, that doesn't mean it's not a great family business, but it's not the kind of venture style business we're wanting to back. So again, your business model needs to demonstrate your capacity to grow the company to that size, and the team that can support that, and the market that demonstrates that. So founder team, this is probably the single most important thing that we back. So we will make sure we spend a whole stack of time with you. If our process is slowed down, it's not for the sake of slowing it down, it's just to make sure that we get to know each other. It's really important that you realize, early stage venture, your hypothesis of the business right now is more than likely going to be wrong, and that's okay. You're a startup, you're meant to be kind of pivoting and evaluating and moving that as the thing evolves, as you're learning. But what doesn't change is the founder, and so we need to make sure that we're backing the right people. And so we spend a fair bit of due diligence just spending with you, understanding how you operate, and I'd probably say, as a bit of advice, you need to do the same thing on your investors. So anyone that you're bringing into your business, all money comes with some form of agenda or required outcome. And once you take investment, that's a long-term journey. Like it's minimum 5, 6, 7 years usually if you're an early stage business. And so you're going to be spending a fair bit of time with those people, and you want to make sure that you want to be in business together. Don't just take the first check that's offered to you necessarily. Make sure you're doing the due diligence on your investor and ask them things like, what deals have you done? What's happened when a deal's gone south? Have you gone through exits? How did that exit occur? Those kind of things are important. So when we think about founders, we have a quick little check that we do that might help on a few fronts. So the first is, we think the founding team needs to have a combination of both industry domain skills. So you need to know, someone in your team needs to know the industry inside out. Someone that's got the technology/innovation skills. So whatever your key innovation is, you need to have skills there. And then commercial skills, people that can make sure the business is structured the right way and do the commercial deals and negotiations and things. Now, it's pretty rare that those three things exist in one person. And so if you're a sole founder, you want to think about how you're filling those gaps, whether that's through a key hire, a CTO that's got some earn up of equity, or an advisory team or something. But you definitely want to be able to talk to those three things. The other thing is we do a quick check, or I suppose an initial checkpoint on what we call the 3 C's. And this is character, competency, and chemistry. And so when we think about founders, we're like, okay, character, are you someone that is honest and trustworthy and has integrity? And we're looking for that. And part of the reason is, of course, everyone wants to work with people like that, but in reality, things are going to go wrong in your business, and we need to know that when that happens, you're going to come and talk to us about that, and we're not going to have to self-discover that. And that's not because we're trying to catch you out, it's because we actually want to help, and we want to understand the problems early and sit around the table with the collective intelligence to figure that out. And so we're kind of trying to test that at a character level. The competency goes back to those 3 things I talked about before. We want to know that there's the right skills in the business and that you're good at what you do, and you can cover off both the industry, technology, and commercial skills. And then the chemistry factor is just when you're going to spend a fair bit of time together, and quite frankly, life's too short to spend time with people that you don't want to do that with. So let's hang out, let's have a coffee, let's have a beer, let's make sure that we enjoy each other's company, but also that when we get together, there's like an energy that means we're going to do greater things when we're together than when we're not, and we can kind of sense that. So that's just an initial pass of how we might think about the founding team. Traction, a couple of things here. Ideally, the business has been incorporated for at least 12 months. And when we say traction, that we're looking for a customer pull for your business. Like it's like the market is saying, I want this. And there's lots of ways you can do that. As I said before, the best way is a paying customer. Nothing beats the fact that you can go, this business model I'm showing you is proven on the fact, hey, we've only got a few customers, but they're paying what the model is based on, and what we think the model could be based on. So paying customers is really important. But that could also be other methods. Like, so we've had companies that have been pre-revenue, they've had a beta version of the product in market, and they've had 1,400 downloads of that beta product, and we've gone, okay, that's enough pent-up customer demand. We will invest pre-revenue, but please don't interpret that as you've got an idea, flick through the idea and we back that. Ideas are easy, execution is difficult. So if you are pre-revenue, and we're going to invest, we're making sure that we understand that you've got a clear pathway to revenue, and that we buy into when you think you're going to be able to switch that revenue story on. So make sure you've got that if you're pre-revenue. And the final thing is value. So there's a few parts of this. The first is thinking about what value can we provide that's beyond just the money. Obviously, the money is value, but we can't just market you directly to our 1 million members, but there are ways over time that we can think about access there if it makes sense, or maybe there's use of your product if it's a direct insurance product, and Brad's on the call today, and we've got opportunities there. We typically will take a board seat or an observatory board role, so we definitely like to add value through governance and just those regular check-ins and helping you with your progress. But we want to understand that. But also then there's that value transaction, which is what value do you bring back to us? And here we're literally talking about the valuation of the company and the likely return. Sometimes people forget that when we invest, the reality is startups are the most high risk asset class of investing in. And that's okay. But when we do that, we're also looking for the highest type of returns. Our venture fund typically is targeting in the vicinity of 40% return in a year of invested capital, but that typically is built up through a portfolio of investments. And you'll find that it's one or two that are bringing the bulk of that return, where they're having a 10 times, if not 100 times uplift in valuation to cover the companies that either don't make it or don't return capital. So what that means is when we're looking at your business, at a minimum, we're looking at your business model and your growth trajectory and the stages of investment that you're going to require to determine whether we think we can get 10 times return on our capital. So if you convince us that the company's worth $10 million, and we buy into that, we're doing that on the basis that we think within 4 to 5 years you can generate an increased value and get the business to $100 million worth of value. And so the business model that you present and the market size and positioning you have, market share, really important part of that story. Roughly speaking, if you're early stage, so the smallest check size we've done is about $200,000, and the largest investment we made is $3 million. And we're typically targeting somewhere between a 10 to 20% equity position in the company if it's early stage. And that's so that we've got enough equity that it makes sense for us to be involved, but not so much that we're not backing you and allowing you to be motivated and run the business yourself. So by virtue of that 10 to 20% position and the amount of money that we'd invest, you can kind of almost reverse engineer what the valuations tend to look like for companies that we get involved in. And so when you're thinking about the valuation of the business, we want you to have thought objectively about that. We've got some metrics as to how we work that out. But obviously, if your expectations are out of the ballpark, then we're not going to be able to get a deal done. If you're an Australian company operating in an Australian market and yet you want to try and leverage US multiples of valuation, we're not going to buy into that story. It's got to be comparative data. So good to come in prepared, thinking about, how much you think the company's worth. Okay, maybe next slide, Joe. So we can come back. I'll take some questions, of course, shortly. Just, I guess the final thing is how our process works. And as I said, we like to try and keep that pretty transparent, and we have some timeframes around this. So one thing we can't do, unfortunately, we just have too much volume to be able to just catch up with someone to chat through your idea. So the first pass to have that conversation is to put in an application. So if you go to BetterLabs Ventures, I'm sure it's in the information that's sent, betterlabsventures.com.au, you can apply online. It's not like a grant where there's a close date and it's not binary in that if you apply and we say no, that's it. It's really just the start point of the conversation. And a number of the companies we've invested in, to be honest, have applied. They've come in for a pitch, and we've kind of pointed out some things that just mean they're probably not investor ready or not quite structured right for us. And those companies have gone away, resolved those issues, and come back, and we've then made an investment. So definitely not binary in terms of apply. We say no, and that's it. So when you think you're ready, obviously you do want to put your best foot forward, of course, but you're welcome to put an application and we can discuss things at that point. Once you've done that, typically within 1 week, we'll get back to you and let you know whether we're interested in discussing things further. And that will be setting up a pitch meeting. Obviously, we do a bunch of those online these days, so no problems if you're on the east and we're on the west. We'll make that work. That pitch meeting goes for 1 hour, and that really is kind of getting the face-to-face story of the application that you've given us. Just keep in mind, it's really important that you keep that pitch consistent with the application that you've given. It happens less these days, but early on we would have people kind of say they're raising $400,000, and by the time we met them 2 weeks later, they suddenly wanted to raise $800,000. And really what that says to us is either the business model's changed so fast that you've then failed the competency check I was talking about before, or you've realized we might be interested and you decide to try and raise more money and you've bumped it up, which has probably failed the character check. So consistency is pretty important. Anyway, so then you get an hour to pitch. Once that's happened, depending on how it goes, we may let you know right there and then what we think, but typically we'll work that all through, and a week later we'll let you know whether we want to progress or not. So pretty much from pitching, in a week you're going to know, yes, we want to continue the conversation. If not, we'll let you know, and we'll try to let you know why as best we can. It's obviously useful to get that learning. If we do want to progress, then at that point, only are we happy to sign an NDA. And we'll ask for a whole bunch of other information, which is what you'd expect in terms of shareholders agreement, key contracts, business model and things. Once you've given us all of that information, we usually spend about 2 weeks doing our DD, and we're often in a lot of contact then just clarifying things. And that one point I'll just make here when we get into DD, which is unfortunately happens more often than not, and it's a shame, is that by the time we get to DD, you can assume that we like you as a founder, we like the business, we like the market opportunity, we like the investment structure. I'd say 90% of the deals that we do that fall over here happen because of what we might describe as business hygiene. So there's things like there's a whole stack of previous investors that came in and they've got some terms in the shareholders agreement that just make it hard for another investor to get involved. There might be debt on the balance sheet that's from a founder that they want paid back, and they're not prepared to convert that to equity, or wait till everybody's taking money off the table. There can be all sorts of things that are more structural. And what's hard about that is often those things were decisions that were made previously that were the right decision at the time relative to where the business was at. But when you present the company to us, we have to look at all of those things in aggregate relative to the opportunity. And sometimes a deal falls over just because there's been too many of those things that have not been thought about, and you're kind of almost relying on the next investor to solve some of those things. Sometimes we can do that. If we love the company, we can help, but it is worth thinking about at a business hygiene, structural, corporate level, financial level. Are you structured well for an investor? Because you'd be surprised how many deals fall over because a bit of work prior could have given you the best shot. So definitely think about that before you're raising your money. If the DD goes well, through that point, we would start talking informally about the terms of the deal. We're very happy to be a lead investor and set the price for a round, but we're also very happy to co-invest and follow terms set by other investors if we, of course, agree with those terms. And often it's not unusual that if we've led a round, that can unlock your other investors once they know you've got your cornerstone investor. It's a really important part of your investment strategy. So that's good to know that we're happy to do that. But the terms we'll be talking about informally, making sure that we agree on the valuation, and we agree to how much money you're trying to raise and how much we're putting into that. That's informal because at that point we then go to an investment committee that needs to sign off on that deal, and nothing is a done deal till our investment committee signs that off. We've had a 100% track record bar one, which is not 100%, but I just don't know what the maths are. So it's probably like 98%, 95%. So there's just one where we were unable to do the deal for a contractual reason at a separate company we were involved in. So that's good, but there is a formality there. And if they sign off on that, we'll present you with a term sheet. Obviously you'll sign that because you'll be so excited to have us as a potential investor. And then we do some final DD and move to closing documents. So at that point, we're getting organised with subscription agreements and updated shareholders agreement. We do have templates for all those things. So if you're really early stage, often it's easier just to take our templates and roll with those. But if you're a bit more mature and have other shareholders and things, then we'll do a review of the documents that you've got. And of course, once that's happened, we sign off and we deposit the money, and you go and build an amazing company and give us 10 times our money back in a few years' time, and it all goes really, really well, as it always does. So just, I guess, kind of a little point here before we pause for questions is that if you've started the process of raising money, it most likely will take you about 6 months, and it's worth thinking about that relative to the distraction away from your core business. And being really honest with yourself, is raising money versus building customer revenue right now the best thing to be doing? And it will always take longer than you expect. And even though we actually move quite quickly, like I've kind of said, once you go through application, we'll get back to you in a week. Initial pitch, we'll get back to you in a week. DD takes us a couple of weeks. Term sheet, another couple of weeks. Like you can see, our process even adds up to about 2 months at best. But at the point you get lawyers involved in contracts, and there's always some, final things that need to be worked through. By the time you found an investor, they've done DD, you've negotiated terms, the lawyers get involved, you sign contracts, and by the time the money comes in the back, it's often about 6 months. So just keep that in mind if you are raising money. Okay, so I think that's, Jay, maybe just jump to the next slide, which I think is questions, and I'll pause there. And happy, anything about our process, but even generically, if you want some input or thoughts on just capital raising in general, then happy to share that. So let me pause, and Rita, I'll leave it to you to maybe facilitate some questions.
Sure thing. Thank you both so much. We've got a few questions that have come through the Q&A, which I'll go through, but if anyone has additional questions, please just type them in as we are speaking. So the first question is around when you are looking and assessing innovation, in inverted commas, does BetterLabs look for net new to the world solutions or new to Australia?
Yeah, so either or neither, I suppose, is the answer, in that, yeah, like if you've got you've seen a business model that's working in the US and you think there's a great opportunity for Australia, like that's good. There's really some comparative data of market demand. So that kind of ticks a few boxes. If it's globally new, we would look at that. But I think I'd just go back to that point I made earlier, that when we talk about innovation, we think just by virtue of our investment mandate, we're looking for companies that we can invest in that are kind of going to go on a growth trajectory quite quickly, which means there is a business model that makes sense and that can generate returns and uplift and sort of move into Series B, Series C rounds over the next kind of 5-10 years. I think when you say new, that sounds very, very early, and you still need to establish a market. So to me, I'm like, that's the go to the moon, go to the Mars kind of thing. That's probably not a place for us. So whilst we have a risk profile, that's probably a bit too far out there. So hopefully that clarifies that question for you.
Thanks. Okay, another question here. Do you absolutely not fund the business idea, in inverted commas, that has a potential to become $1 billion valuation in one of the biggest markets in the world?
If I invested in every idea that someone sat across the table that was an idea that was $1 billion idea, I would have lost all my money, I think is the answer to the question. So unfortunately, ideas are important, but the hardest part is execution. So if it's $1 billion idea, to be honest, we're looking at you going, well, put your money where your mouth is, quit your job or bootstrap the business, put some money in, get it to a point that demonstrates that, and then we're happy to back you. So if you can't go from idea to, I suppose, a stage that's, if it's so good you've not kind of gone after that, it's pretty hard to risk someone else's money on backing you to do that. So I think the answer to that is we definitely would not back just an idea.
Okay, thanks. Now there's a thank you here for your time and insights from Jonathan, and also a follow-up question. So are you investing in later stage companies or predominantly or only early stage?
So we've invested right through from pre-seed rounds through to Series B. Series B is like we would do that. So yeah, I'm not sure when the language of is later stage Series B, but the way I think about it is pre-seed is you're probably pre-revenue, but you're close to revenue. Seed is still at that kind of stage. So Series A, you've probably got a business model and a bit of traction, but the engine is formed. You just need some money for that to kind of grow the engine. So that's kind of probably a real sweet spot for us, seed and Series A. And then Series B is this thing's working really, but now we want to actually start scaling and moving faster. Beyond that, I think there's probably potential other parties, but that's kind of where we go. So I'm not sure what you mean by early or later stage, but hopefully that gives you some clarity.
Yep, great. Another question here. Do you often follow other lead investors?
Yeah, like as I said, we're happy to be the lead investor. Often it's real, when you're raising money, the real key is to try and create demand to get investors to move. Like often there's not a timing of when they have to move, and you can't just say, I'm closing the round on this date, and then they all just line up. It just doesn't work like that. So the real key for you is to find your cornerstone investor. So if you come to us and you've got your cornerstone investor, obviously that's really good, because that's de-risk the investment as other people prepared to get involved. And so we've absolutely done, we follow the investors. But as I said, because we are reasonably mature in the way we understand investing, we're also happy to be that lead investor. So we can often become the investor that puts out the term sheet that then others follow in. So if you've got a number of people who are like, we're really keen, but we're not going to lead the round, or normally your lead investor's probably going to do 50% of the round and they don't have capacity for that, we can also play that role.
A question on diversity. How do you think about diversity, or I guess approach that when you're looking at investments?
That's a good question, and I'm not 100% sure where it's coming from, but I guess what I can say is we are looking at every company on merit, and what's turned out for us, not by design, but by merit, is that I think more than 50% of the companies we've invested in are female founders. Which we're really proud about. So hopefully that's just indicative of how we think about diversity.
And I think the other point on diversity is we're looking for diversity across those emerging innovation domains as well. So we don't want to be too heavy in mobility of the future domain. We'd like to have a spread across those 6 emerging innovation domains.
Yeah, and maybe I think there, I guess, probably to remember that we are a subsidiary of and backed by the RAC in WA, which certainly has policies around that we adhere to.
Okay, great. Okay, a few more questions here. So Ahmet has posted, we're working on a new product around insurance, but being a tech-heavy team, lack the expertise in the domain. Is that something that you can help with around networking with the right people to help with compliance and around the domain knowledge? Would you consider investing in a startup that was in that position?
Well, I think you probably should go and talk to Rita, and they might be able to help as a start point. So yeah, like as I said before, industry knowledge and technology knowledge and commercial knowledge are an important part of that. So I think you need to think about, okay, if you've seen an opportunity in insurance and you don't have that is a risk, right? There is so many idiosyncrasies to any industry that you're going to get caught out on if you don't have that knowledge. So I'd be thinking that you probably need to bring someone onto the team that's got that. If not, at a minimum, you need someone in an advisory role that's guiding you through that. It doesn't mean that we wouldn't explore the opportunity, and obviously we can bring that to the table. We might be the answer to that. But I think, outside of us being an investor, you're kind of going to need to solve that so you don't run into unnecessary problems. But don't let that prevent you applying or talking to us.
Yeah, great. Is it important to have an angle that works for RAC? And I guess what influence do they have on the process, if any?
Sure. Not entirely what you mean by angle for RAC, but I guess often when people say that, they're thinking...
Sorry, James. Derek, I assume that's a strategic angle, is what Andrew was meaning. That's my guess, but type in if it's different.
Okay, sure. Yeah, I think like if you think through what we've sort of presented, I mean, yes, we will invest in mobility and we'll invest in insurance, which is often what people assume when they ask that kind of question. But this is about diversity of revenue and opportunity and return on investment. So, a number of the things we've invested are not at all connected to the RAC in WA in any way. It's just a good opportunity and a good startup investment that fits within one of our emerging innovation domains. So yeah, again, as I said, like really, as long as it's not mining tech, biotech or ag tech, we probably would want to have a look at it. And you don't need to draw a parallel to the RAC in any way, with your business. In terms of influence on the process, I mean, the main way to think about that is the investment committee approval that we have. Includes James and I, but also the group CEO, the group CFO, and the CEO of the insurance business. And the decisions are through majority and made by that group. So that's kind of really where their influence lies. But I would say as well that it's very, like James and I are fully empowered to really drive this and make that happen. So I think by virtue of seeing, I think we've done 16 deals and have put 17 to the, in fact, I think we've put 19 deals or 18 deals to the investment committee. 2 didn't go through because the founders didn't take the terms, which is fine. There's only been 1 that we've put to them that they've not agreed to. So there's really a strong appetite to innovate, to spend the money, and invest and back what we're doing. So hopefully that gives you a good indication.
Yep, great. Sorry, Ram, more questions. So apologies, I feel like I'm pumping you with questions, but there's a bunch here. Firstly, a thank you from anonymous attendee, and then a question. Is there any idea which is off limits or is not a preference? Does ideology matter when it comes to where or if you invest? So I guess that first part is the main question, if there's anything off limits there.
Look, I guess there is and RAC is such a strong brand in WA. So, yeah, we're not going to get involved in a gambling company. We're probably not going to get involved in a gaming company. I've sort of talked about the industries that we won't get involved in. I mean, I think you can think about the ethics of the brand that backs us, and that's kind of what's important. So I'm not sure, in terms of other things you might have in mind, if you want to be specific, and we can let you know, but I hope that gives you enough of an indication.
Question from Nick. What type of experience do you have in scaling out Insurtechs in global markets, if any?
That's a really good question. And so there's a couple of things here, I guess, not Insurtech specifically, but my background in tech has been in large scale enterprise technology companies. So both the company I founded, but prior to that, I was with Barclays Bank, and I think I mentioned PwC, and that was all in global environments in technology, so not specifically to Insurtech. So we've got that experience that we can bring to the table in terms of enterprise software sales in global markets. And what we'll often do, so we've got Brad Chowder on the line. So Brad's our insurance expert and has responsibility within the RAC insurance business to look at the next gen insurance opportunities and innovation. So Brad brings the insurance domain knowledge. So often we've had a couple of companies, like, so one of them, for example, is a business called Waffle Insurance, which is a US company that we've backed. And on the board observer role, we'll get that opportunity. Both Brad and I contribute, so they get both the technology and the insurance experience to contribute to those conversations. So I'm not sure, Brad, I know you're on the line, unless you want to jump in terms of actual very specific Insurtech global market scaling, if there's another answer there, because it's probably not exactly that, but I think the combination of the skills we have provide probably what you need.
Yeah, I think that's right, James. I think one thing to add there is we've got a deep level of connection across international markets, and they allow us to help those Insurtechs that want to scale internationally enter the market in a way they may not ordinarily be able to.
Yeah, and Brad's probably, I mean, the other point here is Brad's got a really strong global insurance network. And so, making recommendations or introductions, whether it's insurers or technology providers or underwriters, like we do that a lot for the companies that we deal with. So.
Great. And yes, I can attest to that network that Brad has globally in the insurance space, which is a huge benefit to the business, but also potentially some of the organisations that you're looking to work with. Okay, next question. How much involvement do you have in your ventures, and do you help make connections, open doors? I guess the question is, what else do you bring to the table other than money and investment?
Sure. Well, hopefully that last answer helped a little bit with that, but we would, so in our terms, we're a pretty friendly venture investor. Like, I know you might hear the word venture capital. Other venture funds might give you some pretty aggressive terms. If someone's got a question about that, just ping it in. I can let you know what they are and what to look out for and how we approach that. But one of the things that we do say is that we would like to either appoint a director or a board observer. Now, most of the time, in fact, only one company that we actually ever appointed the director. It's always a board observer, and a lot of the companies that we get involved in don't even have a board at that point. So what we're doing is establishing that routine of meeting regularly and having accountability. And what I'd like you to please not do is misinterpret that as control, because it's the exact opposite. What I found when I ran my company is when there was someone who was not in the day-to-day that I could meet with on a monthly basis and kind of talk about where I was stuck and kind of have to show up and go, I said I was going to do this and I did it, or I didn't do it. That was one of the things that actually helped us to start scaling. And so that's what we're trying to bring in. So I think that's tremendous value. So either James or I or Brad or KC would play that role depending on what skills you need. So we figure that out with you and kind of help set that meeting up and be a part of that. Yes, absolutely. Connections and open doors. I mean, it's in our interest to help you. Once we've invested, we want to see you do well. So we've done that from the point of like someone might need R&D help, or they might be trying to recruit a CTO, or they might need a lot, like there's all sorts of things, right? So we're definitely trying to be as helpful as possible. And that includes opening up our network. And that might be even your next round. We need to introduce you to investors or things like that. So definitely not interested to be helping with that. The other thing I'll just touch on it because it often comes up is, well, once you've invested, surely I can sell my product to the RAC members in WA. That's a hard thing to do because that part of the RAC business is run very separately to BetterLabs, and that needs to be done on merit. And typically we say, hey, let's journey together for 6 to 12 months and make sure you're delivering on what you are saying. And it's not going to be promote your product directly to the 1 million members, but what we'll often do is there'll be an article that goes onto LinkedIn, or we've got a magazine that goes out called Horizons, or it might be that you're a direct to consumer product that we can offer a discount around and it goes in our member benefits. So there's ways to access the membership, but it's not a direct kind of marketing campaign.
There's actually another question which probably follows on from that. Do you ever use, or would you ever consider using RAC as a test bed for a product or proposition?
I guess there's a couple of angles. Like we haven't in some ways. Definitely Brad in the insurance field has, like an insurance business, has the capacity to trial certain things, if that makes sense. And it's not uncommon, by the way, that he'll be piloting or trialing something which is a startup business idea, and then that company wants to raise money, and then we look at it from an investment perspective. So specifically in insurance, we've definitely done that a few times. If it's more broader than that, we've not really done that. So that would be a bit of a challenge, but again, we'd be open to that conversation if someone has some ideas around that.
Okay, great. You mentioned smallest investment is 200,000 and largest is 3 million. Is there a sweet spot or a preference for deal size for you?
Sweet spot is between 200,000 and 3 million. So yeah, anywhere in that vicinity is good for us. I would say as well, in all honesty, I think we like the 500,000 to 1 million. That's kind of a sweet spot just relative to our fund size right now. However, I wouldn't be hampered by that either. So if you've got a $10 million raise, don't look at the 3 million or even our fund size and not talk to us, because there's appetite and ability for us to invest in larger size deals. And so again, we can treat that on merit, and being a corporate venture fund, you're ultimately investing off the balance sheet. So we can look at investments outside of that. And it's just reminding us something I didn't touch on, but there's not really been questions come about exit and RAC. I guess just pointing out that for us, this can be purely financial in the sense that we run with the company exits, and then we get a return. But it's not out of the question that the RAC, if there's a genuine fit in the business builds, they could even be an acquiring party in time. So there could be a strategic investor kind of angle that you want to think about.
Okay, great. Would you be open to startups in the health insurance or health fund space with a developed technology and domain knowledge?
Yes. Yeah, sure, absolutely. Yeah, I mean, as long, if you say health insurance, that's fine, as long as it's not drifting into a sort of medtech life sciences kind of angle. That doesn't sound like it is. So, sorry, a bit of noise in our background. But yeah, we'd be open to that if you want to talk more about that.
Okay, great. I think we're possibly on to the last question. Can you detail more into what you look for in founders apart from commitment, honesty, and of course their product knowledge? Is there anything else sort of specifically that you would add to that?
Yeah, I'm not sure if you missed it, but we talked about the combination of industry skills, technology skills, and commercial skills. So we're looking for that. So technology, you have skills on the team that are relative to the innovation of the business. Industry, that you know the intricacies of the industry you're operating in, and commercial, that you know how to do employment contracts and negotiate deals and work with lawyers. So those skills. And then the other three things we talked about was the character, competency, and chemistry.
Great. Thank you. So that was actually wonderful to have all those questions come through. So thank you to all of the people present that posted questions and contributed and participated. I think that pretty much does come to the end of our session today. We've got a couple of minutes left to wrap up. Was there anything else from yourself, James or Derek, that you wanted to add at all?
Only that we're open for business. So if you're not sure, flick us a note. We've got Casey on board now, so we can probably kind of help with some questions and answers that you might otherwise have that we couldn't get to before. And we'd love to talk to you. Like I think the relationship with here we have is great in terms of looking for opportunities and that. So yeah, please apply. Please talk to us. We're open for business.
And thank you, Rita and Joe, for hosting.
Pleasure. And from us, we just want to say a big thank you for everyone to joining today, but an even bigger thank you to James and Derek, for sharing a bit of an insight into BetterLabs Ventures and the way that you operate, what you look for. It's incredibly valuable for founders to have a much deeper understanding of that. Thank you also to Brad and to RAC for your ongoing support. It's invaluable to the growth of our Insurtech community here in Australia as well. And I just encourage any founders on the line. It was great to have all those questions. You can check out BetterLabs website. And also, as both James and Derek mentioned, the application process is available via the website. So you can do so online. And we hope to see you at our next event, or one of our next events coming up over the next month or so, to the rest of the community. Thanks again, and enjoy the rest of your day.
Thanks, Rita.
Thank you.